My Vanguard portfolio has dropped from 105,000 to 102,000 in a single month. That is £4,000 gone in July alone. If you have checked your own portfolio this month and felt that little drop in your stomach, you are not alone. And by the end of this video, you are going to understand exactly why this happened and what I am personally doing about it. If this is your first time to the channel, my name is Frank. Welcome to Franck Invest. Please subscribe, follow, and share. Every month, I started to show you guys my Vanguard portfolio, the wins and the losses. And those are real numbers which I am sharing with you guys. Before we start, I'm not a financial advisor, and this is not financial advice. Please do your own research. So let's get started. Before we dive in, a quick context for anyone new here. I have been investing into my Vanguard portfolio for some time now, mostly a mix from global index fund and some UK exposure through the FTSE, and also some equity through S&P 500 from the USA. This is me sharing what is in my own portfolio and why, so you can make your own decision with better information. I'm doing this every single month. Good or bad numbers, I just want to be really transparent with you guys. Last month, if you follow me, you will see my portfolio hitting new high. And this month is completely the opposite. I think it's more useful to show you actually when my portfolio is down, not just when it's all-time high, because that's when people panic and make bad decisions. So let's talk about what actually happened. Here why this matters beyond just my account. If you are investing in the S&P 500 or FTSE Global All Cap Index, you have probably seen some drop in your own portfolio too. This is exactly the moment where people make the two most expensive mistakes in investing. Mistake one, panic selling after a dip. Emotion take over after losses that will have probably recovered. Mistake two, not completely understanding why the market moved. So you can't tell the difference between this is normal and something actually wrong. I want to talk to you about the UK side and the USA side of the drop, because they are not the same story. And understanding the difference will make you calm, informed for the rest of the year. Let's start close to home. The FTSE 100 has held up better than expected this month. It's been trading near 4 months high, around 10,600 to 10,700 point range, and even posted a weekly gain in early July. what has been driving it. Mining stocks, energy, and banking. Financial and precious metals miners have been strong, and companies like Barclays have been extraordinary run, up over 50% in the past year alone. Telecom and travel names like Vodafone, EasyJet have also a strong week. On the other side, the UK economic data hasn't been great. The composite PMI slipped into contraction territory, meaning business activity is actually shrinking slightly. The Bank of England is holding rates around 3.75% and also keeping a close eye on inflation. Healthcare and wealth management stocks have fallen behind. So the UK piece of my portfolio has actually fairly been resilient this month. It's not where most of my £4,000 drop came from. For that, we need to look across the Atlantic. This is where the real story is. The US stock market had an incredible first half of 2026. The S&P 500 had its best quarter since 2020, driven largely by a handful of semiconductor and AI-related stocks. And those stocks has doubled in the last 6 months. So here's the thing about stock that double in 6 months. Eventually, investors take profit, and that is exactly what happened in July. We have seen a sharp rotation out of the biggest winners. Chip makers like Macron, SanDisk have posted some of the steepest decline, and the semiconductor index has been on track for 20% pullback from its high. Even Taiwan Semiconductor, despite beating earnings, sold off after raising its spending forecast. That weakness has dragged the Nasdaq more down than the S&P 500. We have seen days when the Nasdaq dropped 1.5% and the S&P dropped 0.5%. The Dow, which has less tech exposure, has held much better. Add to that some of the conflict we're still having in the Middle East. The oil price still going up. I will actually do a new video related to that topic, so keep watching the channel. Also, Federal Reserve under a new chair, who's still cautious about rate cut. And one of the Fed regional presidents flagged about USA inflation. Here is the most important context. Even with the pullback, the S&P 500 still up close to double digit for the year. So when I break down my £4,000 drop from my portfolio, all that mostly come from the US stock market, especially the tech sector. And I will say it, UK actually has done well. Hi, as you can see, welcome to the portfolio, which is at 102K, 849 and 14 pence. So let me just dive in to show you in more details. So here we are. As you can see, from the previous months, it was about 105K. So now 102K. So the big drop is from July, which is big red there, as you can see. And then in July, the big red again, just close to 2K, 1,971. I mean, am I going to change anything? Absolutely not. I am investing for the long term. So every month I will put whatever money I can, and I'm just going to keep the same strategy months and years to come. So here we are. Thank you. A quick recap before I go. The FTSE has been relatively resilient, supported by banks and energy. And the US pullback has been concentrated with semiconductor and AI, which has made that big pullback, especially on my own portfolio. And for me, I'm not worried. I'm sticking to my own strategy, long-term investing. If you like to see more of those real numbers from my own portfolio, please subscribe and follow, share, and like. I hope you enjoy it. My name is Frank, and welcome to Frank Invest. And I hope I see you again for the next one. Thank you.